Hello everyone and welcome to today's morning report on Wednesday the 22nd of October with me, Rich Perry, market analyst at Handtech Markets. These European markets are a little bit mixed at the open. That's come not really been able to follow through from that strong day that we saw yesterday on Wall Street. The S&P 500 was up 2% on the day. That's the biggest one-day climb in 2014. The big impact of that has been certainly to drag this volatility even lower. That's 4 days in a row now. The VIX has been sharply down. And as I've said previously, big corrections in the VIX following big spikes higher, certainly across the last 2 years, have been indicative of big market bottoms. So that could well be, I believe that we have seen a market bottom anyway, but I think this is just going to back up that view. So it looks like equities are moving higher, although in Europe a little bit mixed at the open. DAX is 0.4% higher, FTSE is actually down slightly, 0.2%, and the CAC pretty much flat. So not really following on through. The Asian markets were strong overnight, yes, with the Nikkei 2.6% higher, certainly helped by a slight weakening of the yen that we saw yesterday, and that sort of moves us into the dollar analysis as well. The fact that we have had a fairly choppy and volatile few weeks, certainly you would say, on dollar index, and that continues. And yesterday we had a sharp strengthening of the dollar late on, after having seemingly moved to the weak, moved down on the dollar, and there were a lot of signs on the forex pairs that the dollar was weakening, but it managed to reclaim some of the lost ground and certainly has improved again. But you're still in this downtrend channel on the dollar index, so it'll be interesting to see if the rebound in the dollar can continue. Certainly at the moment it is continuing. Early indications were that the dollar was fairly mixed, but it's certainly regaining ground now, certainly against euro and sterling as well. However, the yen is stronger, very slightly stronger, and that's come after the Japanese trade data came in nice and strong overnight and has found a bit of support. In terms of the other currencies as well, some support also for the Aussie dollar after CPI came in line with expectations, and the New Zealand dollar as well is fairly positive in front of its CPI data tonight. That moves me on to the economic data for today. We've got a little bit of central bank news with the Bank of England meeting minutes 9:30. There's no real expectation of any movement on the dissenting voices. 7-2 expected there in terms of how the voting structure came in the last meeting. And then we're moving on to the main event of the day, which is US CPI inflation at 1:30. It's actually expected to drop slightly to 1.6% from 1.7% last month. But the trend seems to be on the downside once again, and certainly if the move is anything like what we saw on cable last week, on the UK inflation last week, which saw a sharp decline back to 1.2%, it could suggest that there'd be a bit of dollar volatility today. And then into the afternoon, we've got Bank of Canada rates decision at 3 o'clock. 1% expected there, so no change. And also into the evening, as I said, CPI for New Zealand at 10:45 UK time, and that again is expected to drop to 1.3%. Okay, so my chart of the day is the DAX, and we've had this strong rebound in the equity markets and volatile move across the last 5 days, 6 days on the DAX. But what you can see here, you might be able to make it out that there is actually a head and shoulders of reversal, and I can show you that on the daily, on the intraday chart. But certainly the rebound has also taken us above the 89.03 mark. At 89.03 becomes the immediate support, which is now being tested actually as we speak, pretty much, as the DAX just drifts slightly backwards. But you look at these momentum indicators on the daily chart. Stochastics have now confirmed a buy signal on a crossover. MACD lines have come together and are looking to turn up. The RSI also improving as well. So this looks like an improving scenario we've got here. But I'm not saying it's a medium to long-term buy, because certainly it looks as though that you still do have the legacy of this huge top pattern on the DAX, and this is just effectively unwinding some of the oversold momentum. But we have got the scope for a medium-term improvement, and certainly there is on the hourly chart is the head and shoulders reversal, nicely through the neckline around 88.47, which was the breakout, and we're seeing some consolidation at the moment as well. But 88.47, 88.50, I suppose you'd class it as, is that neckline, and that base pattern remains intact until you actually see a break back below the right hand shoulder, which is 86.45. So a nice rebound there potentially in this DAX chart. Certainly it's broken this downtrend that it's been in, and it looks like the outlook is improving. So you'd say in terms of upside targets, you actually measure from the neckline to the bottom of the base, and that actually gives you about a 500 pip or 500 tick target to the upside, which is not too shabby at all in terms of upside. You've still got to move back towards maybe 93.50 if that's the case, so it could well see a nice rebound, testing some resistances on the way through. 91.40 is that probably the key near-term resistance, but certainly looks like it's just dipping back towards that neckline support, and also that key old support of the 89.03 reaction low. So that is the outlook for the DAX today. I wish you good luck in your trading, and I will speak to you later. Thank you.